Everything you need to know about home ownership in the U.S. Home ownership in the U.S. is one of the biggest financial goals for many people, but it is also one of the most misunderstood. A home can represent stability, independence, family security, and long-term wealth. But buying a home can also become a financial burden if you enter the process unprepared. The biggest mistake many buyers make is thinking the mortgage payment is the only cost that matters. In reality, home ownership includes property taxes, insurance, repairs, maintenance, utilities, closing costs, HOA fees, and emergency expenses. That is why a house that looks affordable on paper can become stressful in real life. U.S. home prices have generally increased over time, but incomes have not always kept up at the same pace. This has made affordability one of the biggest challenges for first-time buyers. Mortgage rates also play a huge role in affordability. When interest rates rise, the same house can become much more expensive every month. A buyer may qualify for a home at one interest rate but struggle with the payment at a higher rate. This is why timing, financing, and personal readiness all matter. Before shopping for homes, ask yourself whether home ownership actually fits your current life. Buying may make sense if you have stable income, savings, manageable debt, and plans to stay in one place for several years. Renting may make more sense if your job is uncertain, your savings are limited, or you may need to move soon. Renting is not always throwing money away. Renting can buy flexibility, lower responsibility, and protection from major repair costs. Owning gives you control, possible equity growth, and a stronger sense of permanence. The right choice depends on your finances, goals, and stage of life. Once you decide that buying is realistic, start by checking your credit score. Your credit score affects your mortgage approval and the interest rate you may receive. Even a small difference in your mortgage rate can cost or save you thousands of dollars over time. You should also review your debt-to-income ratio. This ratio compares your monthly debt payments to your monthly income. Lenders use it to judge whether you can safely handle a mortgage payment. If you already have high credit card debt, car loans, or personal loans, your buying power may be limited. Paying down debt before applying for a mortgage can improve your chances of approval. It can also make your future monthly budget easier to manage. Next, save for a down payment. Many people believe they need 20% down, but that is not always true. Some loan programs allow qualified buyers to purchase with a much smaller down payment. However, a smaller down payment usually means a larger loan. It may also mean private mortgage insurance or higher monthly costs. A larger down payment can reduce your monthly payment and give you more equity from the start. But you should not use every dollar of savings just to make the down payment. You still need cash for closing costs. Closing costs can include lender fees, title fees, appraisal fees, prepaid taxes, insurance, and other charges. These costs can add thousands of dollars before you even receive the keys. You also need an emergency fund after closing. Homes can surprise you with repairs soon after you move in. A water heater can break, a roof can leak, or an air conditioning system can fail. If you have no savings left, even a normal repair can become a crisis. After preparing your finances, get pre-approved for a mortgage. A pre-approval helps you understand your realistic price range. It also shows sellers that you are a serious buyer. But the amount a lender approves is not always the amount you should spend. A bank may approve you for a payment that technically fits their formula. But only you know your lifestyle, family needs, travel plans, savings goals, and comfort level. Set your own maximum monthly payment before looking at homes. This helps prevent emotional decisions. When choosing a home, do not focus only on the house itself. Location matters just as much as the property. A home's location affects commute time, schools, taxes, safety, insurance, future resale value, and daily quality of life. A beautiful house in the wrong location may not be the right home for you. You should also research property taxes and homeowners insurance before making an offer. These costs can vary widely depending on the state, county, neighborhood, and risk factors. In some areas, insurance can rise because of storms, floods, fires, or other local risks. If the home has an HOA, review the monthly dues and rules carefully. HOA fees can affect affordability, and HOA rules can affect how you use your property. Work with a trustworthy real estate agent, lender, inspector, and insurance provider. A good team can help you understand the market, avoid mistakes, and protect your interests. When you make an offer, do not let competition push you beyond your budget. Winning the house is not worth it if the payment makes your life stressful. Inspection and appraisal contingencies can protect you from expensive surprises. A home inspection can reveal roof issues, plumbing problems, electrical concerns, foundation damage, or other hidden risks. An appraisal helps confirm whether the home's value supports the loan amount. Never assume you can simply refinance later if the payment feels high. Rates may not fall when you need them to, and refinancing also has costs. Here are some bonus tips and out-of-the-box hacks that can help make home buying cheaper, faster, and less stressful. Before shopping seriously, create a real ownership budget that includes the mortgage, taxes, insurance, utilities, repairs, HOA fees, and a monthly emergency fund. Instead of only asking, "Can I afford this home?" ask, "Can I still live comfortably if something breaks next month?" One smart shortcut is to call insurance companies before making an offer, because some homes look affordable until the insurance quote comes back expensive. Another useful hack is to check local property tax history, because a low current tax bill may jump after the home is reassessed. If possible, drive around the neighborhood at different times of day to check traffic, noise, parking, safety, and overall comfort. You can save stress by making a simple spreadsheet that compares each home's total monthly cost, not just the listing price. Ask the seller for average utility bills so you can estimate the real cost of heating, cooling, water, and electricity. If the home has an HOA, read the rules before falling in love with the property, because restrictions and fees can affect your lifestyle. A powerful money-saving move is to keep a repair fund separate from your regular savings so normal home problems do not feel like emergencies. During inspection, ask the inspector to rank issues by urgency so you know what must be fixed now and what can wait. Do not just look for the perfect house. Look for a house with problems you can afford and tolerate. To save time, get your financial documents ready early, including pay stubs, tax returns, bank statements, debt records, and ID. To reduce pressure, decide your maximum offer before negotiations begin so emotions do not push you into overpaying. The best shortcut is preparation, because the more you understand before buying, the fewer expensive surprises you face after moving in. Homeownership can be a powerful milestone when it is approached with preparation, patience, and discipline. The best home is not the biggest one you can buy, but the one that supports your life without trapping your finances. If you found this video helpful, please like, subscribe, and share it with someone who might be thinking about buying a home.